What up, guys? It's Timo here. Let's take a quick look at the markets. So Bitcoin is at 89k, so going sideways right now. If you compare to the all-time high of 126k, Bitcoin is now down by 30%. So that's quite a drop, but still the market looks robust. But first, please check our partner strategy.ai. The easiest way to shift your crypto instantly, and you can take control of your digital assets. But yeah, into Bitcoin. So Bitcoin trades at 89k currently, and when we look here at the CVD, we are seeing actually some buying pressure from whales. So whales are buying. So we might have a shift here ahead. December has been quite negative, but we might see the sentiment shifting here. So retail is not buying, but we are seeing well level interest here. So that looks good. So in a way we are kind of like in this mezzanine market is it like negative or positive? So Bitcoin is basically going sideways, and I think it might continue to go sideways in January too. So I'm not expecting any kind of edgy drop or market crash, but then again it's also a bit difficult to see Bitcoin reaching new all-time highs beyond 126k, because it requires a lot of new liquidity to the market. So then the question would be that where is the liquidity coming from? It should come from institutions or then retail investors, of course. So that's the big question. So do we have new demand coming in? I think at some point we will have, and if you look at the long-term time horizon, I think Bitcoin still going up for sure, against national fiat currencies. So but right now I think there are many factors that are affecting Bitcoin. One is of course we have an ongoing war in Europe, but we could have another in Asia, and the reports of China approaching Taiwan currently. So this why gold has been performing so well this year. One reason is that investors might be pricing in the potential of a new war in Asia. That would be like a new one. So a lot of things at play, and when Bitcoin is more like risk on asset, then Bitcoin doesn't like new wars for sure. So if there is a credible threat of a new war, then that's why Bitcoin has been performing badly this year. But overall, about narratives and everything about new demand, I think crypto overall is here to stay. It's by now it's too big to fail. So crypto in all its forms, from Bitcoin to stable coins to everything, it's here to stay. And now we have a very friendly government for crypto in US. But in order to for Bitcoin to reach new all-time highs, the question is that where's the money coming from? And I think overall crypto needs new narratives. So recently we had this Bitcoin ETFs, then digital asset treasury companies were the new thing, and now we have seen that, but we need something new in order for crypto to rally again. What will it be? That's another question, and it remains to be seen. But the scene needs new narratives for sure, and that's. I think next year we'll see what will it be. So of course when precious metals have been performing well this year, gold and especially silver. Of course we have this gold-related tokens, PaxG and Tether's XAUT. So these cryptos have been performing well, but they basically track the price of gold. But yeah, here we're seeing this from Darkforest CryptoQuant's chart. So here we're seeing actually that we used to have more like long-term holder selling pressure. So like long-term investors got scared a bit in November and December, but now that selling is getting like exhausted, so we are not seeing that selling pressure anymore. That's a good sign. So of course in theory we could see Bitcoin rising to like 90k, even close to 100k. We could see like a rally here. Overall I see Bitcoin going sideways from here. I'm not expecting any big moves to either direction, to be honest. Of course, if the Asian potential war in Asia would escalate, of course, then we might see a dump, and it would also correlate with stock market and tech stocks and everything. But yeah, let's move on. So I wrote about stable coins. This CryptoQuant article. So here we are seeing a stablecoin reserve correction. Stablecoin reserves have dropped by -12% from November to December. So this also kind of indicates how the market is cooling off, but it's normal. We still have a lot of like dry powder there on exchanges. But yeah, we are seeing kind of like this mezzanine phase that we are just going sideways, and it's hard to say if the sentiment is positive or negative. So ERC20 stablecoin reserves have decreased by -12%, and it's what is going on right now. So traders have been withdrawing stablecoins to self-custody wallets and just like off exchanges. So this is what usually happens when the spot prices decrease. But still there's a lot of dry powder. So basically exchanges overall have 48 billion USD worth of stablecoin liquidity. That's quite a lot. So that's almost like 50 billion worth of stablecoin liquidity. So if the sentiment gets better, these stablecoins will then flow to crypto. But right now it's a bit hard to see any kind of like bigger rally happening. But you never know. So these stablecoins are waiting there to be used. Unused liquidity for now. So let's move forward to macro. I'm trying to keep this short. So this year, you know that Bitcoin hasn't been performing that well. We are now at the end of December, and Bitcoin is down by -7.5%. Ethereum is actually down by almost 13%. So that's quite a lot, and S&P, Nasdaq are up by around 15%. So that's they have been performing a lot better. I was actually expecting Bitcoin to be correlated with Nasdaq, so it would have been like at least plus 20% this year, but that hasn't been happening. So yeah, it hasn't been that good year for Bitcoin, but still the market hasn't collapsed either. It's just like the performance hasn't been that good, and we are seeing here that gold is up by 66% year to date, while silver is up by 124%. So that's a lot. Precious metals have been a very, very good investment this year. But next week we'll have two guests. We'll have Martin Albert from Bitalo. He's a Bitcoin OG, and then we'll have Quant Juhani. So at least two guests next week. let's take a deeper dive then, and I think we can wrap this up, and we can then discuss more in depth next week what is going on. But thanks for the year, and see you in 2026.